This conference will now be recorded.
Hi, everyone. Here's Christina Cola-Colucci, Head of Business Advisory at Woodburn Accountants and Advisors. And I'm going to be giving you tip number 9 about setting up your company in China. In all the previous tips, we were looking at the structural obligations and key considerations that you have to make. And now I want to look a little bit at the operating aspect. So when you set up your company in China, you will be required to comply with certain accounting and tax processes and procedures. As I mentioned earlier when I was doing the tip about location, when you set up in your district, you've got to register with your tax bureau that is based in your district. And you will have a preliminary meeting with your designated tax officer who will be responsible for your company. And if you are setting up a company in China, my assumption will be that you are looking at some point in time to generate revenue and issue VAT invoices. So my tip number 9 is for you to understand what a VAT invoice looks like, which you can find on your screen here, and to explain a little bit about the operational procedures of the tax bureaus. So as I mentioned, you're going to have this preliminary meeting with your tax officer where you have to describe the activities that you're going to be performing within your organization in China. The tax bureau will give you basically information on what type of taxes will be applicable, and there will be the standard ones. One will be profits tax or enterprise income tax, which is at a rate of 25%, but there is currently a guideline for SMEs whereby within the first 1 million revenue generated, you are at a 5% profits tax rate. Between 1 and 3 million, you are at a 10% profits tax rate. So there is this special policy up until December 31st, 2021. And there is no rumor. I'm just giving you my opinion. I believe that due to COVID, that might be extended, and I certainly hope that it will be extended. Otherwise, the standard profits tax rate is at 25%. There are special sectors, especially if you are in the high-tech industry sector, where you could get special rates at 15%, but this has to be applied for. And if you try to get any of these special rates, there is always an application procedure that is never guaranteed. In addition to that, you've got value-added tax. Now, value-added tax is a tax that is applicable on all service and trade invoices. Okay, so basically on anything and everything, including logistical invoices, etc. When you're trading with goods, the general VAT rate is 13%, but it does depend on the HS code of your product, but the main rate is at 13%. When you are looking at issuing VAT invoices for services, you're generally looking at a rate of 6%. Now, when you are talking with your tax officer, one of the first questions he will ask you is whether you want to remain as a small-scale taxpayer or a general VAT taxpayer. And this gets into one of the key considerations you have to make. Small-scale taxpayer would generally be for service-oriented companies who have no VAT deductions to make because they're not really transacting with other third parties because they're delivering the services themselves. For those of you that are transacting and trading, then you would probably go directly into being a general VAT taxpayer, and so that you can deduct all of the VAT that you have paid for when you purchase goods from your supplier. So if you want to have that debate and that brainstorming, should I not become a general VAT taxpayer, don't hesitate to reach out. In front of you is a special VAT fapiao. These VAT fapiaos are purchased from the tax bureaus, and you need to also buy a VAT software system in order to be able to calculate your VAT payable. This is why management reports have to be produced monthly, because VAT, if you are a general VAT taxpayer, is payable on a monthly basis. Now, the third main tax component is also then individual income tax. If you have employees in China, then individual income tax will also have to be owed. There are a number of other taxes that have to come into consideration, like stamp duty tax, consumption tax, etc. But those three would really be the main ones that you'd have to think of during your startup phase. Setting up your accounting software system, setting up your accounting procedures is critical to make sure that you remain compliant with your tax officer and your tax bureau. If you've got any questions about developing an ERP system, wanting to know what accounting software systems exist in China, whether your accounting software system is applicable, the one that you're using now in China, don't hesitate to reach out. If you're looking to outsource all of those functions, you can also reach out to Woodburn Accountants and Advisors for those services. I wish you the best of luck to set up your back-end operation in terms of your finances and your financial management report systems. And remember, financial management reports are the key pieces of documents that will help you to make decisions in order to accelerate your growth in China. So make sure that you consider the back-end operation and the compliance procedures clearly. Take care and goodbye.